Hello everyone, hope you guys are doing well today. Today we are going to begin with our section C, that is expenses and overheads. Now in expenses and overheads, basically what we're trying to identify or we're trying to discuss here is how do we basically classify our overheads expenses into the products so that we can recover them from the products that we are selling. Obviously, if we are having an expense in the company, our objective will be to recover it from the sold goods, right? So what are the techniques that we can use? What are the areas we should focus? How do we classify an expense as direct or indirect? Should we recover it directly from the product, directly allocating to the product, or should we spread it over departments and department wise we should restrict our overheads or transfer them to other areas? All of these questions are going to be answered here. Now, definition of expense. Expense is referring to the overall decrease in the economic resources that we are having, such as the assets. It is causing an outflow of assets, that is basically depletion of cash or bank, and incurrence of a liability, such as accounts payable. Okay, now if you are having an expense, what is an expense? Expense is basically any kind of thing that happens on the cost of the company that is related to the company. These basically result in a liability if not paid at time, or it could result in a cash or an asset outflow, that is cash or bank, or any kind of resources that we can give as a collateral for the expenses that we have enjoyed. Now, these can result in a decrease in equity, excluding owner distribution. Examples: paying rent reduces cash outflow of assets, receiving a utility bill to pay later, incurring a liability. Now, types and nature of expenses. First of all, the type and nature of expenses are material and labor, that are direct expenses for the product that we can charge directly to the product. Rent, utilities, insurance, delivery costs, audit and legal fees. These are the fees that are basically required to operate a company, but not directly relatable to the product, right? So most of them relate to an indirect nature of expense. Now, just for the context of double entries, I'm giving you double entries of expenses. Normally, what happens in an expense is, if we have an expense has a debit nature. So when an expense incurs, we have a double entry of expense debit, or if we paid, then we have cash on the credit side, or if it is a liability, then we have a payable on the credit side that is recorded. So these are double entries for expenses. In normal terms, in financial accounting terms, I believe that you have done some of the financial accounting components. So just giving you the reference of it. Now, classification by action. Classification by action means that first of all, we have to see which of the particular expenses relate to which of the departments. So expenses are often grouped based on department or function that they incurred on. So building management has rent, utilities, property taxes. Product department has repair, maintenance, hire leases. Selling department has advertising, delivery, customer service. Finance and legal fee have loan interest, legal fees, audit and insurances. So why are we discussing this? Because each of the department has a overall expenditure that is direct and indirect nature. At the end of the day, the production expenses that are there are going to be directly related to the product. Any kind of indirect expenses are going to be attributed to a particular department that are going to be then allocated, apportioned and reapportioned to be basically recovered from the products that we are selling in the market. So if we are selling a product in the market, we are selling it at full cost, right? By full cost, I mean that we are using our direct material, our direct labor, our variable production overheads, our fixed production overheads, and our overall. Now adding all these up will give me the direct cost of the product. After adding the direct cost or cost of production, I can basically add my indirect overheads per product or per unit. So it will give me total cost on which I can apply my profit percentage and sell it in the market. So I need to identify the indirect overheads and direct overheads that are allocated to a particular product. Okay. Now, direct expenses. Direct expenses are basically expenses that are directly traceable to a specific product, service, or cost unit. So the main keyword here is traceable. Traceability is the concept that we have to see here. Included in prime cost, direct material, direct labor, or direct expenses. Example, royalties paid to a designer for custom product. A product has been made and the royalty is paid to directly designer who is designing the product. So he has a direct trace or direct mark on the particular product. Fees paid to a subcontractor for a specific job. I'm giving him a specific job, so he's working on the job. If I'm paying him something, it is directly related to the job, right? If I'm teaching you and I'm charging you money, it is a directly relatable cost or directly relatable expense. Okay. Now, indirect expenses, cost is not directly linked to a single product or service included in overhead cost. Now, understand one thing, that if we have any kind of situation where the traceability will give us a benefit that is lower than the cost of tracing the particular expense. In that situation, we are not going to go for a direct approach, we are going to go for an indirect approach or classify it as an indirect expense. What do I mean by that? Let's say I have oil used in my machinery, right? And the machinery sews clothes. So a sewing machine using oil. Now, can I trace the oil that is consumed per product? Now, it will take me a lot of time to identify that which product consume how many points or milliliters of oil. It is nearly impossible to do it. Even if I assign a person to basically monitor it, it will incur a high cost. The cost that is incurred to basically identify the trace of the cost or the expense that is being incurred will be so high that it will outweigh the benefit of basically tracing the cost. So I am not going to get into a position where I am getting into an expense that is going to surpass the benefit that I am achieving from tracing the cost. So I will just directly go for an indirect approach and classify it as a indirect expense. Okay. Now, overhead classification by function. By function, I mean is that production manager or production department overheads incurred within production area, such as heating, lighting, factory rent, depreciation of factory machinery. Each department has overhead, right? Each department has components that are directly not traceable to a product. Yes. So that is why we are going to have overheads in each of the department, even production department. Let's say example, a production manager who is supervising the production. Is he in the production department? Yes, he is. Is he supervising the production? Yes, he is. But can I trace the cost or the time he's allocated per unit? No, I cannot. So the traceability of the cost is very difficult. If the traceability is difficult, that means in the end, I'm having a question of whether should I go and trace it, is it worth it or not? It is absolutely not worth it. Okay. Next, administration overheads. Administration overheads say that it is incurred in non-production departments. Example, salaries, office supplies, internet bills. Selling distribution, this is also an indirect overhead incurred while marketing and distributing products, delivery of vehicle, advertising, promotion, and overhead and absorption in production. Overhead absorption in production department, what does basically it says? It says that now we have a department, and in the department of production, most of the expenses are coming directly relatable to the particular product. So what we have to do is classify, see whether it is direct or indirect in nature, and if it is indirect, how are we going to classify it onto the particular product for recoverability. So here, to cost products accurately, production overheads are assigned to production cost centers and service centers. Production cost center where actual production takes place, such as machining department, assembly department, finishing department. Each cost center is allocated a share of overheads. So each of the cost center is allocated a particular share of the overheads. That means basically at the end of the day, they are going to have some overhead or fixed cost per unit being applied. The number of units increased, the fixed cost per unit will decrease. So it can be easily allocated per product, right? Now, B is the service cost center. Service cost center is basically supporting departments or production department. Now, in a company, in a house, there are people who are earning and there are people who are basically helping the other parties focus on work, right? If I'm earning in my household, my mother is helping me in the house. She is cooking for me. She is helping me in providing me services or providing me a support that I would not be able to work efficiently if I don't have. Okay, so in the organization, a finance department is immensely important, but it is producing the products? No, it is not. So at the end of the day, they are not the people or not the areas that we are going to know as earning money. They're not the ones earning money, but they're facilitating the production departments in a way that they are able to focus on production and earn money. Okay, so support departments include maintenance, stores, canteen that help the company operate efficiently. Okay, now treatment of expenses. Treatment of expenses basically focus on tell us how do we treat an expense, whether it is direct or indirect in nature. If it is a direct expense, we directly relate it to a particular product or a job. They are therefore added to the direct material cost and direct labor cost to form a prime cost. So the formula for our prime cost is direct material plus direct labor plus direct expenses, right? And indirect expenses do not relate directly to a production of a single department, product, or any kind of areas. So they are shared between various products that create an expense. Prime cost of a product plus share of overhead is equals to total cost of product. So adding the share of indirect cost will make my overall cost the total cost of product. Now, what do we have to see here is how do we classify, how do we absorb, or how do we allocate indirect expense to a particular unit? That is the next thing that we are going to look upon. Okay, now let's see how do we do that. Now, absorption costing is costing method that includes both direct and indirect cost in the total cost per unit. So absorption costing, we are going to use a statement as well. We are going to see the statement as well. We are going to work on that. But right now, for your knowledge, absorption costing is a costing that includes all kinds of costs that have incurred on a product or the organization. Marginal costing, on the other hand, just focuses on the marginal areas or the areas of direct costs on the product. Okay. Now, purpose to ensure that the total cost of product reflects all resources used, especially indirect costs such as rent, electricity, maintenance. If we have a full cost, we can easily determine the selling price of the particular product. So marginal costing has like ability where you are not able to identify the full selling price of the product accurately. You are using estimations that are not very valid for the particular product. So we are going to see the statements, but right now we just focus on what we are going. Okay. Now, why is overhead absorption important to calculate selling price and profitability? Obviously, we have discussed it. A business must ensure that the selling price covers both direct and indirect cost. Example, 18 is direct material, 10 is direct material, direct labor is 8, overhead is 15, so total cost becomes 33. If we move this out, if we don't consider this, we are not going to be able to identify the selling price accurately. So if they are saying we are having a 12 rupee profit or a 10% profit, whatever it is, we're going to use it and have a selling price identified and the profit can be separated there. Now, in marginal costing, there is an issue that when we study the statements, I'm going to tell you about it. But right now, you just need to identify that in absorptional costing, we have a more accurate basis of costing of the particular products. Okay. Now, to value inventory accurately, inventory includes raw material, work in progress, finished goods, including overheads in inventory valuation gives a more accurate cost per unit. This ensures correct cost of sales and accurate closing inventory, and it also aligns with IS2. What is IS2? IS2 is basically your financial reporting standard that focuses on inventory. So it says that measure your particular inventory at lower of cost or NRV. NRV is basically the market value less any kind of completion cost that is left with the particular product. So if we are not identifying the complete cost, if we are not identifying the complete cost, automatically it will be always measured at our cost. And it might not go aligning with our IS2. If it is not aligned with IS2, then at the end of the day, when the auditor comes in, he is going to point out that your financial statements are wrong. Okay. Another example, 100 units have been finished. Cost per unit are 18, 12, and total cost is 30. So finished inventory is 3000 at its word. Okay. If overheads were ignored, inventory would be understated by at least 1800 rupees, right? So there is a substantial difference here only because the particular overhead would have not been identified. Now, basically, there are three steps in which we can absorb a cost to a particular unit or to a particular department. Now, first is allocation. Allocation is basically also known as assigning of cost. Okay. Now, there are two types of cost. One is a whole cost and one is a shared cost. Okay. Okay. I'm going to give you one example that is going to help you understanding when to be apportioned, how do we allocate and when do we allocate? Now, whole cost is a cost that can be taken as an example of a burger. Normally, one person purchases a one burger for himself. Okay, he won't share it with anyone else, right? And the shared cost can be as a pizza. Okay. Now, why am I giving you these examples? Now, this example is going to help you understand how a whole cost is allocated and how a share cost is allocated. Now, understand one thing, that if a person is eating a burger for himself and it cost him 10 rupees. So obviously he is the person who's going to bear the complete cost, right? So we are not going to assign this cost to any other person, any other department. This is a complete allocation of cost. Now we're going to allocate this cost to the person who has consumed the complete burger, right? On the other hand, if it's a pizza, there are 8 slices in a pizza. There were 4 people that have consumed the pizza, right? So if there are 8 slices in the pizza and the complete pizza cost me $16, I will say that the slices were 8, right? So 16 divided by 8 gives me 2. So every person who consumed one slice of pizza will have to pay $2, right? That means I am going to basically do what? I'm going to apportion or assign a cost based on the portion of consumption by a particular department or particular person. So if a person eats 3 slices, then 2 into 3, that means he is going to pay me $6, right? Now this is a shared product, so we are going to use apportionment. Otherwise, we would have directly allocated to the particular person. Now, the first step is allocation, that is for whole cost. If a department consumes a cost for its own, such as a production supervisor is only in the production department, a finance manager is only in the finance department, they are going to bear the complete cost on their own. Next step is shared cost, such as heating, lighting, security guards, rent, etc. So all the departments require a particular area to be fulfilled to sit, have electricity, have a guard outside their office. So that would be a shared cost that everyone will bear equally. Once the shared cost is there, we are going to apportion it based on the consumption or an accurate basis. After we have apportioned the cost, each department has their cost. But one thing is common there, that the earning departments, the production departments are the departments that are going to help us earn the money back or recover the money from the customer. So at the end of the day, the costs that are even shared to other departments are allocated to the production departments on fair basis, so that the production department can assign it to a product and they can get the money back from the market easily. Okay. Now, let's just read the wordings. We have understood the concept, I believe. When entire overhead cost is related to a specific one cost center is allocated, is known as allocation to that center. Example, salary of a canteen manager is $5,000 and relates only to canteen. So he is going to be assigned as the complete cost of canteen, right? So canteen cost center will increase by 5,000. I believe this is clear to you guys. Next thing we have is overhead apportionment and reapportionment. Apportionment basically says is the second step in which absorption costing. It refers sharing common overheads among multiple cost centers. Okay, among multiple cost centers when the cost cannot be traced to a specific department. Okay, so if I cannot trace a cost to a specific department, I'm going to share it obviously. Now the example of pizza. So the whole cost and common cost, whole cost can be directly identified to a specific center, and shared cost or common cost is divided among all the cost or revenue centers or all the centers that are in the company on a fair apportionment basis. Now, basis of apportionment, what is it? What do we discuss in basis of apportionment? Basis of apportionment basically gives us the idea of fair measurable basis upon which we can divide the cost on a particular department. Let's say rent. Rent is based on what? Rent is based on the area that we have. A 300-meter area or a 300 square feet house is going to have a different rent, and a 500 square feet house will have a different rent. So with this floor space, and my rent will vary, right? So these are basically known as cost drivers as well. These are the reasons due to which costs are incurred or increase or decrease. So if you are having a rent, the main factor that is coming in my mind is floor area. Heat and lighting is also dependent on the floor area. The bigger the area, the more the heat and lighting we are required to have. Depreciation of machinery is based on number of machineries or value of machinery. Power is based on kilowatts. Insurance on value of machines. Canteen cost, number of employees. Personal department, number of employees, etc. etc. So these are the costs that are being divided on the cost drivers because they are most relevant to these areas or are incurring the cost because of this area. Okay. Now, fairness of basis. Fairness of basis, what does it mean? Fairness of basis basically says that it must reflect true cause of cost. So, true reason of the cost. When overhead cannot be allocated to one cost center, it must be apportioned based on fair usage basis. For example, rent on floor space is more appropriate than headcount in a factory. The number of people are not going to determine the rent of the company. The area that we have covered is going to determine the rent of the company. So, a total rent is 12,000. There are three departments: machining, assembly, and packaging. The floor area is given to us at 4,000, 3,000, 3,000. That means the total floor area is of 10,000. Now, if I have to apportion the rent, what will I do is I have two techniques here. First, identify the per square feet rent. Okay, so I am having a total rent of 12,000 and my total space is 10,000, right? So 1.2 is the rent per square feet, right? Now, if one department consumes 4,000 square feet, so I will multiply it by 1.2, right? So 4 into 4,000 into 1.2 gives me 4,800. This is the share of the cost that is going to be assigned to machining. Then we have 3,000, so 3,600. Then we have packaging at 3,000, so 3,600 again. Now remember that total of these all costs should be equal to the total rent that we have. So yes, the total is coming to 12,000. That means I have apportioned them accurately. There might be some differences in terms of, let's say, pointers, 1 or 2 rupees or 10 rupees. That doesn't matter because that is basically due to your decimal places that we have. Okay. Now, here we have another thing, another scenario, that is apportionment of rent and power. So now I would like you guys to basically solve this question on your own. Once you have decided to, or once you have solved this question, I'm going to solve it together with you guys. Okay. So I'm pausing the video. You also pause the video and attempt the question, and then we are going to solve it together. Okay. Now let's solve this question together. Now, what does the question say? The question says there are two production departments, A, B. There are two service departments, maintenance and warehouse. Okay. Now I'm just writing them, the credentials here. Okay. So A, B. For maintenance, I'm writing M. For warehouse, I'm writing W. Okay. Now they're saying the company has overhead to be apportioned that is coming to be 100,000 for rent and rates and 40,000 for power. Okay. Now they have given me two situations, two areas. Now power is basically used on power usage. That is the appropriate basis, and the rent can be apportioned on floor area. That's the appropriate basis, right? So here I will just do what? I will simply just do what? Divide the total cost by the total of my basis. So total cost for rent is 100,000. Divide by my basis, that is 2,000. So I'm going to get an answer of 50, right? Now this is 50 per square meter. And for electricity, I am having a cost of 40,000. Sorry, 40,000. And I will divide it by 100% or 100. So it will give me 400 per percent, right? Now let's do it. Now I'm just not using percentage and multiplying it by the 60 for 20 and 10. I'm removing the 6% sign. Okay. So let's just do it for each of the departments. Now for rent, what I have to do is multiply 50 by each of the departments overhead. So 50 into 1000, 50,000. Then I have 600. So 50 into 600, 30,000. Then we have 50 into 200. That is 10,000 and 10,000. This is the rent apportioned for each of the department, right? Next we have our power usage. So 400 per unit. So 400 into 60, that is going to be giving me 24,000. I'm writing with a different color so that you don't get confused. Power usage. So we are having 24,000 first. Next is 20%. So 28,000. Then we have 10, that is 4,000, 4,000. Now remember that the total should be equal to what the amount is. So 24,000 plus 16,000 is equal to 40,000, and 50 plus 30, 80 plus 20, 100. So both of them are having a total of the overall cost that we have. Now what you have to do is total each of the columns. Okay. So in department A, I'm having an overall overhead of 74,000. For B, I'm having 38,000. For C, I'm having 14,000. And for W, I'm having 14,000. Okay. Now the next step will be reapportionment. Okay. But for today, we'll keep it till here. In our lesson, we have overall discussed, seen what are the overall costs that we are going to have. So this is the step of allocation and apportionment. In the next class, we're going to continue with our reapportionment and multiple methods of reapportionment. So till then, enjoy learning. Goodbye.